Good evening to all of you. Before we begin the webinar, let us do a very quick sound check first. Can you guys hear me loud and clear? If you can you just help me to type a yes in the chat box, right? If you have problem hearing me, then just type a no in the chat box so that I know you are facing some audio issues, okay? Okay, thank you, Judy. Thank you, Han Sing, Dave, right? Jay, John. Okay, thank you. So all okay, all can hear loud and clear. All right. Great. All right. Emily says loud and clear. Okay, great. So once again, thank you all for joining us in this session on Alibaba. Okay, so today we are going to do a live investment case study on this company called Alibaba. That I believe is a brand that most of us should be quite familiar with already, right? Am I right to say that? Okay, let's try something interesting, okay? Can you guys help me by typing in the chat box, okay, what is the first thing that comes to your mind when you think about Alibaba? Okay, what's the first thing? It could be a name, it could be something, a product or a service that pops out in your mind about Alibaba. The first thing you think about it, okay? Just type in the chat box because I'm curious to see what everyone thinks here, okay? Okay, let me see. Taobao, shopping, okay. Taobao, Jack Ma, Taobao, or mostly Taobao, okay. Lazada, oh, okay. Yeah, so mainly it's the shopping part, right? Whether it's Taobao, Lazada, they all belong to the shopping side of things. And then one of you guys mentioned Jack Ma, yeah, a very important figure for Alibaba. Okay, so it seems like you guys are actually quite familiar with Alibaba. At least you do know about what are the main business, which is e-commerce, right? As Peter, you have rightly pointed out. Okay, so the next question that I have for all of you is, how many of you here, you are investors of Alibaba? Okay, if you own Alibaba shares right now, you help me type a number 1 in the chat box. If you don't own any Alibaba shares, help me type a number 2 in the chat box. Okay, nothing to hide, okay, nothing secretive. Okay, so just let me know whether you guys own shares. Okay, let me see, more 1 or more 2. 40, 40 means what? 40 means own 40 shares. Okay, okay, so a mixture of 1 and 2. Okay, so some of you guys, you already own Alibaba shares, about 50-50, 50% of you guys, and then the other 50% you don't own Alibaba shares yet. But the fact that you're joining me in this webinar, I know that means to say you want to find out more about this company. You want to find out more whether there's any growth potential in the business so that you can see how it might potentially fit into your investment portfolio. And that is what I'll be covering more in detail in today's session, so that you can understand the business of Alibaba better before you invest in it. For those of you who are new and for those of you who are existing investors, you might not really understand the business as well when you actually started investing in it last time, okay? So I think this is a very good chance for us to do some recap and also update of what has changed for the business, because there are some changes that have happened to the business. Before I begin, just a quick disclaimer. Today we are talking about Alibaba, but this is not a buy or sell call. So I'm not telling you to buy or to sell away your shares on Alibaba, but rather I'm trying to share with you the way I see the business of Alibaba. And I will also be sharing with you some of the potential investment risk as well, so that you have a more balanced view of the company as well as your investment. But before you make any investment, trading, or investing, always make sure you do your own due diligence and proper research, okay? And if you have any questions along the way, can you just send them into the Q&A box? So try not to type in the chat box, you can type inside the Q&A box, and I will address them towards the end of the session. All right, so this is what we're going to be talking about for Alibaba. Okay, now, while Alibaba is still largely operating in a very similar business line as how it used to be over the last few years, but I would say that its focus, the strategy moving forward, and the business model has actually gone through a lot of changes in the past few years, okay? So right now, if you look at the whole Alibaba group, it now operates through 3 main areas or 3 core areas. So what are the 3 core areas? The first one is the Alibaba China e-commerce group. Okay, and then we also have the Alibaba International Digital Commerce Group, as well as the Cloud Intelligence Group. So these three, they are the core areas that is in focus for the business for Alibaba. Now, of course, we also have the other businesses that they have, but these are much smaller pieces of the businesses. They are not the biggest focus on the main focus of the whole business, or we say the whole Alibaba group. Okay, so I think it's good for us to start off first with the China e-commerce segment first, because I think that is the area that most people are really familiar with. Okay, so let's start off with this part on the Alibaba China e-commerce first. So in China, Alibaba actually operates platforms like Taobao. Okay, as you can see, the first one Taobao, and the second one is their Tianmao. Okay, in Chinese it's Tianmao. Okay, now do you guys know what is the difference between the Taobao and the Tianmao? Can you let me know in the chat box? If you know, you just type a yes. If you don't know what's the difference, you help me type a no. Okay, do you know what's the difference between the first two? Right, these two brands that are under China e-commerce group. Okay, let me see. No. Okay, Jay says no. Dave says no. Okay, in the meantime, let me try and find where is my annotation. How do I find the annotation? Okay, it's okay. Okay, I can't find my annotation to draw here today, but okay, I'll just use my mouse to actually hover over. Okay, so you guys say you don't know what's the difference, right? Okay, so okay, John said cater to different demographics. Yes, you can say that. Okay, so basically what's the difference between Taobao and the Tmall is that for Taobao, it's a platform where you have the small independent seller. They can go and list the products on the platform to sell to consumers. Okay, now on the other hand, okay, the Tianmao is what? The Tianmao is where it's the platform where you have the authentic brands, okay, branded goods. They go onto the platform to list the products to sell to consumers. Think, for example, Apple, okay, or brands like Xiaomi, or even Lululemon. So it can be international brands, it can be China brands, right? They can list on the Tmall to actually sell their products. Okay, so for example, today, if you see Lululemon products on the Tianmao, then there's a higher chance it's real one. Okay, it's real product. But if you see it on Taobao, okay, they sell an Apple iPhone or they sell a Xiaomi product, and then there is a high chance that it could be fake. Okay, because for Taobao is where you have the smaller independent seller. You don't need to have a brand, that people know internationally or nationally. You can still list it on Taobao. So yes, one of you guys actually mentioned for different demographics. Yeah, you're right. That is to cater to different demographics based on that. So that's how they segment. Okay, but that is not all to the China e-commerce segment, because within this segment, we also have other things. If you notice the brands that is under this chart over here on the left, if you read down, there are also other brands. Okay, so within this segment, we also have the on-demand delivery platform. Last time it's called okay, it's to deliver food. And then they also have their online travel agency Fliggy, okay, Feizhu, that is added to the segment. And this one they only added through the restructuring that happened last year in 2025. Previously, they were a separate business segment, okay? And also last year, end of last year, they went through some rebranding. So now the is not called already, it's called the Taobao Instant Commerce, okay? In Chinese, it means the Taobao Shangou. So that means you can buy very fast and you are able to get the products fast as well. So in the last 1 year or so, there has been all of this restructuring plans that have happened, right? And finally, also under the China e-commerce group, you see the last one is this 16888, right? The 1688, okay? 1688 is the wholesale marketplace that connects the manufacturers and the wholesale sellers to the wholesale buyers in China. So this is their B2B business, okay? So that's basically the entire China e-commerce group. Now, what about the next one? International Digital Commerce Group. Now, for International Digital Commerce Group, In short, they call it AIDC. Okay, it focuses on serving the customers and the merchants outside of China. So just now, one of you guys talked about Lazada. Yes, that is under this business segment. Okay, but not only Lazada, you also have other brands like AliExpress and so on. So they are serving the customers outside of China. And what's interesting is that Alibaba doesn't just run marketplace, but built around these platforms, they will also have built supporting businesses that can strengthen the entire ecosystem to create synergies, strategic synergies. So for example, if you look at this part under all others, you have this one called 菜鸟. So 菜鸟 is their supply chain management, the transportation part, okay, the delivery infrastructure. Yeah, so these are some of the smaller businesses, but they are there to support the core business segment so that we can have some strategic synergy and have a whole ecosystem that is working together, okay? And finally, the third core important business segment that we need to understand is that Alibaba is not just only about e-commerce. It's not just only about shopping, okay? But it is also a leading provider of cloud solutions in China, in Asia Pacific through their Alibaba Cloud. So for Alibaba Cloud, later on I will show you the market share. Okay, I will show you, how where it is standing against the other players in China and also around the world, right? With some of the big names that you might know about in cloud computing market, right? So in simple terms, what happens to this component of the business is that companies, they can use Alibaba Cloud to go and run their applications, they can store their data, they can scale up their digital infrastructure. So this is also, in fact, a very important segment that we are going to talk about later on when it comes to the key focus area for Alibaba Group moving forward. Okay. Now, so in terms of strategic direction, Alibaba has been focusing on two main priorities. Okay, the first is called user first, and the second is AI-driven growth. So the user first strategy means to say that Alibaba tries to optimize everything around the user experience. So this includes things like product design, your interface of the platform, the kind of algorithm, how strong are your algorithm to do recommendation to the user so that they can buy more, they can make more purchases, and including, of course, customer support. Okay, this is especially important. Why? Because if you look at the China e-commerce industry right now, the penetration is actually already very high. It is estimated that this e-commerce penetration is about 30% of the total retail sales based on the figures that was last disclosed in 2024. That means to say almost every type of product can actually really be bought online in today's age. So that means instead of simply attracting more users onto the platform, what they need to do is I need to retain the users. I need to make sure my users stay engaged. Then they will continue to use my platform to make their purchases. So that's why they need to have better user experience. They need to do better targeting and more personalized marketing. And that is their user first strategy. Now, aside from the user-first strategy, the second important focus is artificial intelligence, okay? Now, AI, I'm sure AI is something that you have been hearing for very long, over the last 1 year or so. In fact, in your everyday work or life, you might be using AI almost on a daily basis. So for businesses, artificial intelligence is also their central part of the strategy and their core focus because it does have potential to drive further growth across their existing business segments that they have. Okay, so the reason is this. You look at a company like Alibaba, look at their Taobao, right? Or the number of users that they have on their platform is very large. And that means to say they are able to absorb a very massive amount of data on a day-to-day basis. And that will give them the opportunity to apply AI to help them to boost their growth and their business. So a few years back, okay, in 2023, they actually have this generative AI assistant called Taobao Wenwen, which gives users more detailed product recommendations to help them to decide what to buy. Okay, but that really is only the beginning. Okay, now they have more and more things that are coming up. In fact, just recently, I know now we are in March, but 2 months ago, in January, they announced that they will be integrating their AI assistant called, in Chinese, it's called 千问. Yeah, in English, it's a very unique name. It's Quen. Okay, so this is their AI assistant, Quen. It will be integrated across all the other platforms like their Taobao instant commerce platform, Alipay, and so on. So how it works is this, if you look at the screenshots, so I actually put in 3 screenshots on this slide over here. So how it works is that today users can just simply give a simple instruction inside the Quen chat interface. Like I can type in, help me to order a cup of bubble tea. And then Quen, what it will do is they will go and recommend a product as well as the delivery address based on the user location, where the user is the nearest one, right? And then the user can seamlessly pay using Alipay. So what they're trying to do here is this point number 3 that's really important. So what they want to do is they want to build a super app, okay, where now it becomes so convenient. It becomes so powerful that I don't even need to click, I want to buy this bubble tea and so on. My AI assistant can help me to do some of the things that I used to have to do it on my own. So that is the vision that they want towards building a super app where you can do everything you want to do inside the Alibaba ecosystem. Whether is it shopping or is it food delivery or eat or travel as well, right? Or other purchases, but you can all do it inside the Alibaba ecosystem. So basically, that is what they want to do. So in case some of you guys don't know, travel, how does travel come into play? So remember the Fei Zhu, the Fliggy that I shared earlier on. So that one, yeah, you can also use it to book your travel tickets. Okay, so you can book your flights or tickets to train and so on. So everything they want to do it under the whole Alibaba's ecosystem. Okay. Now, so the next question is, how big are each of these business segments? And which are the ones that are really important for its future growth? Where are the growth drivers? Where are the key focus that we need to be looking at? Okay, and I think this part is very timely because for those of you, if you recall, when you were signing up for this webinar, you could actually send in questions before the webinar. So I actually looked through the questions and I see there are quite a number of questions that are asking the same thing, which is really on growth drivers, right? Competitive edge. What are some of the most important catalysts that might help to push up the price further in the future, okay? But before I go through that, I need to tell you that I cannot, right? I cannot predict the exact price. Okay, so that means to say today I can share with you some of the key focus areas or growth drivers that could be helpful for this business. But when exactly we are going to see the price increase, I don't know. Okay, because that one, none of us here, we can control. Okay, so before we look at what are the important growth drivers or key focus, key pillars for this business of Alibaba, to understand that you need to first look at their revenue contribution first. So in any business, whenever we do our analysis for a company, we always look at the revenue contribution by business segment. And that is also how we actually do our report writing, right, for our community as well. So if you look at this total revenue based on the latest 9 months of results for 2025, financial year 2025, this is the revenue contribution by the business segment. So first up, who is number one? Number one is China e-commerce. 51% of Alibaba's revenue comes from the China e-commerce, which are your Taobao and all that that we are very familiar with, okay? And then after that 51%, the next one is number 2, cloud intelligence, 14%. And then the third player is the international digital commerce, right? Like AliExpress, your Lazada, and so on, 13% of the revenue. And finally, all others is about 22%. So all others is the logistics business, their media business, their AMAP, and so on. All the other smaller businesses add together 22%. Okay. So in particular, if we zoom in onto the numbers, especially for the China e-commerce part, because that is like that is about how many percent? 51%, half of the revenue. So this is a very important cash cow business for the company. So if in particular, if we zoom in to look at the recent numbers, in fact, they have just released their earnings, okay, in March, right? And what you are seeing here, this 9 months ended 31st December 2025 is based on their latest earnings that they have released in March, okay? So under the China e-commerce group, they further break it down. So the e-commerce part is the first two line where I also put in the logo of the brands, and then your quick commerce is the Taobao Shankou, and they also have their China commerce wholesale. So the biggest part comes from still the Taobao and the Tmall section, okay? And you can see that the biggest driver of growth is actually still coming from this thing called customer management. So now in the latest 9 months, it has grown by about 6% for that e-commerce site in China. Okay, this box up 6%. Slight improvement. In 2023, when I pull out the data, 2023, it contracted by about 3%. Then 2024, it grew by about 5%. So now we see a 6%, very, very slight improvement. If we break this down, 6% down further, right, this is what we can see. Okay, so these are the 3 quarters that have been already released for the financial year 2025. And you can see that for the e-commerce customer management part, it actually increased better, 10% for the first 2 quarters of FY 2025. But in the most recent 3rd quarter, it's only just about 1%. So what is happening to this business, right? Is it something wrong? That's why from 10% drop to 1%, right? So what is happening? Is it because people are not using their platforms or so? Okay, so firstly, you need to understand what exactly is this customer management revenue. Now, this customer management revenue is the fees that the merchants have to pay to advertise their products onto the Alibaba platforms, as well as some software fees, okay? So in layman's term, it means to say Alibaba makes advertising revenue, okay, from the merchants. It could be based on things like cost per click or cost per 1,000 impression or those kind of typical metrics. And this merchant also need to pay the software fees that is charged at 0.6% of their actual GMV. GMV stands for gross merchandise value, okay, which means to say the total monetary value of the goods that is sold. So what we saw over here, that 1% only, this slowdown was because of the phase out of the impact of this software fee implementation. Because what happened is in September 2024, they actually started to implement this software fees. So by September 2025, which is this most recent quarter that is released, we don't see that impact of the implementation of the software fee anymore, because 1 year ago, it already started implementing. So that's why only 1%. Whereas for the Q1 and Q2, the base period that they compare against was when this software fees was not implemented yet, right? So that's why you see this kind of figures, 10% versus 1%. So for this China e-commerce segment of the business, Alibaba has actually been facing a lot of pressure from investors, because there are many people who feel that Alibaba China e-commerce is losing ground to the other players. Okay, but I would say this is still this is still a very important segment for the entire group, because it is a very important cash cow for Alibaba. Okay, now at this juncture, I'm going to ask you guys a question. Okay, now do you guys know who are some of the key competitors of Alibaba when it comes to e-commerce? Can you help me to type in the chat box any names that you can think about? The key competitors of Alibaba when it comes to China e-commerce. Okay, China e-commerce. So we are not talking about cloud or anything, okay? Any ideas? Okay, PDD, okay. Yes, so players like PDD, JD actually has a different model. Yeah. Not as, yes, you can say that it is also in this industry, yeah, but the model is also slightly different. Okay, Meituan, okay, for the quick commerce side of things, yes, okay. Now, if you look at the China e-commerce where you are looking at like the Taobao side, right, or the Tmall side, players like your PDD, right, or live streaming platforms like Douyin, all of these are actually key competitors to Alibaba, okay? And to be fair, there is some truth to the fear that investors actually have, right, where they are losing confidence about Alibaba being able to retain its market share, because as you can see from this chart over here, it shows us that the e-commerce market share in China has actually, Alibaba's share has actually been declining. So Alibaba is the one in the darkest blue, and then JD is the one in the light blue, and the other players as well. Of course, it is still the biggest player by market share. It's still the biggest player when it comes to the China e-commerce part. But yeah, it has actually been losing some of its market share over the last few years. But right now, this decline in market share also seems to be stabilizing, especially as Alibaba results, right? It has begun to reaccelerate recently as well. Now, at the same time, if you look at PDD Holdings, right, Pinduoduo, its revenue growth. So how you can see this chart, right? This chart shows us the revenue. So the green bars is the revenues of PDD Holdings over the various quarter in the last few years. So you read from the right to the left. In this case, the right one is 2023, the left one is 2025. So you can see that the revenue growth actually has been slowing down. That means to say the bars, they are not increasing as fast as it used to increase. Now the increase is actually smaller, and in some periods there is also some dip in the revenue as well. So what is happening is that PDD, right, Pinduoduo, initially when they started, their revenue grew very fast. So people are very scared that it's going to replace and take over Alibaba. But right now you can see that this revenue growth has actually already slowed down drastically compared to how it started initially, okay? And in my view, I actually believe that PDD Holdings has a competitive moat that is relatively narrow. And a big part of it comes down to the kind of business model and the strategy that it has adopted. So it's important to understand what Alibaba's competitors are doing, because you want to be able to invest in a business which is doing better, or you are the leader of that industry, right? So let's take a quick look at what PDD has been doing, the strategy, and why I personally feel that the moat is actually relatively narrow as compared to Alibaba. In terms of the strategy that this company is looking at, what they were doing is they want to focus on affordable, often unbranded products. So they tend to prioritize a lot of the low cost item, really cheap, so that they can attract all the very price sensitive consumers. Now, for price sensitive consumers, usually it works well when the economic environment is weak. So that kind of strategy will work well, right? Because people are very scared to spend too much money. They want to buy the lowest the best value for money product under that kind of economic condition. So this strategy has worked well under that kind of environment. And because of this, Pinduoduo actually managed to grow very quickly initially, and they became the second most popular e-commerce platform in China, right? So after that, what they tried to do is they went to replicate this model internationally through the other brand to go to international markets. But the problem is that there has been a lot of product issues, because while their products are very cheap, there is also very high level of quality issues. So a lot of complaints on their product, right? That it's not even worth the money, right? It tears off very fast. So for this company, right, Pinduoduo, in terms of the strategy, I think the main difference between Alibaba and this company is in terms of their long-term investment strategy. So over the last few years, what we see for Alibaba is that it has been investing heavily in areas like artificial intelligence. It has been investing heavily in its cloud infrastructure, which are the future important growth areas. Whereas for Pinduoduo, they have been more focused on spending on promotions, they give a lot of subsidies in order to drive users onto their platform and to spend and buy their products. So over a long term, I believe that such kind of strategy is usually not so sustainable. And that is why I believe, in my opinion, I feel that PDD has a weaker moat as compared to Alibaba. Okay. So in fact, in the past, there were also a lot of issues where they have their suppliers who were having protests outside their office in Guangzhou because of very harsh policies where not just only customers are unhappy, sellers are also unhappy. That means the merchants. They're unhappy because the platform have very unfair refund policies that is against the rights of the merchants. So that's why there were protests by the merchant side as well. Okay. On the other hand, if you look at Alibaba, they have been actually trying to improve their support for the merchants and also the customer experience. So one area is in terms of their refund policies, where they are working to support high performing merchants. If today your rating, this merchant, if your rating is 4.8 and above, right? Under the new policy, the company will encourage them to have a direct negotiation between merchants and customers. So it's not like auto refund. So it's not like customers say, I want to refund, then automatically I refund. Okay, whereas for platforms in the past, how come the merchants actually complain for the Pinduoduo is because they have this kind of unfair policies for the merchant. So all of this play a part. It might sound like, it's just a small thing, but it plays a part in trying to retain your merchants, your customers. Because if you don't have these merchants, you won't have the customers coming to your platform to buy. It's an entire whole ecosystem, right? And aside from Pinduoduo, another very big competitor is the live streaming platforms, right? Like Douyin, Kuaishou. So the rise of live streaming in the last few years, it has actually created some very strong competition for Alibaba, for its e-commerce platform. Because for this live streaming platform, what happens is that people can watch. I watch the live stream, and then the influencer will introduce a product, they'll talk about how good it is, and viewers can immediately just buy from there. Okay, so that was the challenge, right, and the rising competition. But of course, such kind of business model will have its own challenges as well. For instance, there are a lot of impulse buys, and therefore the rate of the return of the products tend to be higher as compared to the traditional e-commerce platforms like Alibaba's Taobao and Tianmao and so on. So they do have their own challenges, but it doesn't mean to say that Alibaba is not going to do anything about it. So yes, while there are challenges like some of the live streamer, they go and sell fake products, right? Fake bird nest soup, things like that. But actually, Alibaba has been doing something about that as well. So what happened last year was that Alibaba partnered with Xiaohongshu to leverage its social media capabilities. Now, I'm not sure whether you guys know about Xiaohongshu. Maybe you don't use it because here in Singapore, not a lot of people use it. Or maybe you only use it to plan for your trips to China. But it is a very important social media platform for the Chinese, okay? So how does this collaboration work? How it works is that now product links of the items that are sold on Taobao platform, all these links, they can be embedded directly under the post in Xiaohongshu. So I can just click, I'm scrolling through Xiaohongshu, I can just click and I'll be directed to the Alibaba platform to go and complete the purchase. And in addition to that, the brands also can track the entire consumer journey. That means to say, today I'm the merchant or I'm the brand. I can track. I have an account system that can track from the Xiaohongshu side to the Alibaba side. So it gives them visibility on more statistics to know how well their strategy has been playing out. So essentially, what is happening is that Alibaba, they cannot be as good as Douyin when it comes to social media capabilities. Then never mind, I work with another social media platform to leverage on their capabilities to be able to do so. Okay? So far, are you guys able to follow me? Okay? If you can follow what I've been sharing so far and all's good, can you just help me type a yes in the chat box? Okay, thank you. All right. So that is the part on their e-commerce. Okay, but that is not all. So yes, e-commerce is still going to be very important. They cannot ignore that part. they have to fight the competition, because that is a very important cash cow for the business to have the money to do all of their investments, like their AI investments right now. But aside from that, what is very important in terms of the future growth is really their cloud intelligence group. Okay, so how big is their cloud intelligence group? In terms of in China, they are actually the top player in terms of cloud in China. So if you look at the chart on the left, Alibaba Cloud is the biggest player. And then after that, then you have the other players like Huawei, Tencent, right? And if you compare Alibaba with the overseas international players like Amazon, okay, they're AWS or Microsoft, Google, actually Alibaba is number 4. Okay, the top is Amazon, then you have Microsoft Azure, and then you have Google Cloud. Okay, and then number 4 internationally is Alibaba. So that's why I say that this part of the business is actually very important, right? And they're actually doing pretty well for this as well. Okay, so to talk about cloud, we cannot ignore this topic of AI, because they are very closely related to one another, cloud and AI. Okay, so let's now talk a little bit about the Alibaba's AI strategy. Okay, particularly about this open source AI model that's called Qwen. So what happens is that Qwen, okay, in the recent times, there has been very strong adoption of this Qwen model across the different industries. Can be industries like education, multimedia, automotive, any industry that requires the use of their AI model. So what happens is that it's an open source AI model. So other players in other industries, they can actually make use of this open source AI model to go and do what they need to train their own proprietary AI model using their own company internal data, right? But the interesting part that some people find hard to understand is, so if this model is open source, that means to say it's freely available, right, for people to make use of this AI model, then how does Alibaba Group actually make money from it? Okay, so this is where it's really interesting. Now, how they actually make money, not just for Alibaba only, but also for the other cloud providers like your Google Cloud, your Microsoft Azure. How they make money is through this whole land and expand cloud flywheel. So essentially what happens is today, Alibaba allows the developers to go and use their Qwen model freely. So the model, when more and more people use, is also good for them. But once these companies start to use their model to build real application using their Qwen model, what they need is the cloud infrastructure to run the AI models at scale for their businesses in various industries. And this is where Alibaba Cloud comes in. So the developers, the enterprises that deploy the applications using Qwen, they will access the model through Alibaba Cloud's platform. And usually how they make money for cloud computing is based on usage. Okay, so it could be based on the number of tokens processed and things like that, the terminologies for the cloud computing part. But in others, if you use more computing power, right, you need more cloud services. You need more cloud services, you pay for higher usage, and that is where they monetize. But that is where Alibaba make money and actually monetize through this part of the business. So in other words, although it's an open source AI model, but they are able to monetize through their Alibaba cloud computing infrastructure. And that's also the reason why for this latest 9 months of 2025 results, their cloud computing growth is 33%. Okay, so that is definitely much higher as compared to what you see for the e-commerce side. Because the e-commerce one is where it's very stable really, right? But this is the one where there is still high growth potential. So this is potentially a key growth area for Alibaba moving forward that myself, I will be paying attention to as an investor, right? In fact, in their latest earning call that happened just last week only, the management explicitly highlighted that the business goal of Alibaba's AI strategy is very clear. Over the next 5 years, our goal is we want to surpass $100 billion in combined cloud and AI external revenue. So there is clear, concrete target that they are working towards. But the thing is, when you talk about AI, right, there are a lot of news and headlines about AI every other day. Okay, whether it's coming from China or coming from the US side. Okay, and different companies, the different Chinese tech companies, they will say that, okay, I released my new AI model. And then they will say, okay, my latest AI model, it has surpassed a certain benchmark. It's on par with this other US AI model or so on. So you see this kind of headlines, as you can see from the screenshot that I put on this slide over here. So there will be a lot of this kind of news. But personally, I think that we should not just only focus on all of this, what we call benchmark scores. Because if you just focus on this, you might be missing out on the bigger picture. At the end of the day, it's not about all this benchmark score or who I surpass. Am I the best now? But it's really about this thing, this part. How well can company integrate the AI into your existing business model to really generate earnings? You need to have a good business model. Then together with your AI tool to actually generate money. In other words, AI is just a feature. Okay, the real monetization engine usually comes from the existing business model. So what is the business model for Alibaba? They already have an ecosystem that can support this long-term monetization, right? And the biggest piece of the puzzle is Alibaba Cloud, as I have just shared with you how they can actually monetize. And not just that, aside from that, AI will also help to support their e-commerce business moving forward so that it doesn't lose out. They have all the different AI tools on their e-commerce platforms, both from the consumer side and also from the merchant side. Okay, so from consumer side, they have AI tools to help them make better decisions. From the merchant side also, where they can do better targeting. They have all these AI tools like this is in Chinese is the 全站推, right? They push out better ads to target the customer so that they can get higher sales for the merchant. So when your merchants are happy, your users are happy buying products that they like, what happens? They're going to more likely stay onto the platform and continue to buy because they feel that I can make good purchases on my platform. So AI is also important when it comes back to the e-commerce side, all right, to help them to feed into the e-commerce existing business, right? So these are the two important things. Their cloud as well as the China e-commerce that is still a big part of their business. Now, but having said that, does that mean to say that this is a good business that have no risk at all? Of course not, right? Because for any investment, it involves investment risk, and including for Alibaba as well. So what are some of the key risk factors that we need to know before we invest in the company, right? Or before you decide to have any position in the company. So here I've identified 3 of the biggest risks, in my opinion, when it comes to this investment in Alibaba. Firstly is the macroeconomic softness that we are still seeing in China. As you can see from the revenue contribution, right, about 50% comes from the China e-commerce segment. And it's mainly through their platforms like Taobao, Tmall. So because of this, it means to say the company is still very sensitive to the changes in the consumer spending. If consumers are not willing to spend, it will still affect their sales on the platforms as well. So in the last few years, we have seen how the consumer demand in China has become relatively weak. While now there are some government stimulus measures, but all this kind of thing, they don't change immediately. So structural issues like this, they don't just turn around overnight. Usually it takes time for the consumer confidence to slowly recover, for their spending momentum to slowly recover. So this would be one key risk when it comes to Alibaba. Now, the second key risk is the expansion of their quick commerce. So they have been having a very brutal competition with JD and with Meituan, where these 3 giants, they have been pouring a lot of money. They give heavy discount to attract users to go and use their platform for quick commerce. So because of that, if you look at the China e-commerce, the whole segment, the adjusted EBITDA is earnings, it actually fell by 46% for the 9 months, the latest 9 months of FY 2025. So it's not because the Taobao site is not making money. No, it's because they actually put in a lot of money, expenses into this part, which is also under that same China e-commerce business segment, right? So from an investor perspective, this is actually one of the key risks. especially in the near term, because they have also talked about how they want to continue to actually expand this quick commerce part. But one recent good news is that actually just yesterday, if you actually saw there was this part where they say that the China's market regulator, they had a seminar. Okay, let me show you the screenshot. Okay, yeah, so I went to screenshot this article talking about just published yesterday, that yesterday the China's market regulator held a seminar to curb unfair competition. Okay, and then under their state-backed newspaper, they talk about how this entire food delivery sector has fallen into a vicious cycle of losing money just to gain attention that will weigh on the broader recovery of consumption. So that means to say, if things get really bad, right? If the price war is really bad, we can expect that the regulators might actually come in and step in, right, to intervene, to tone down the level of the price war for this quick commerce segment. Now, finally, the third key risk is I would say it's like a structural characteristic of China's tech sector, which is that they tend to lean towards the use of subsidy-driven strategies to compete with one another, right? If you look at many industries like e-commerce, food delivery, ride-hailing, AI also, right, or cloud computing, there is a common pattern, which is that when they try to get market share, they're really aggressive. They will actually reduce the pricing, or they give a lot of subsidy so that they can capture more market share. So in the short term, all of this will weigh down on their profitability. Yeah, so it will only start to see results when it stabilizes, or when the regulator actually step in, when there is too heavy price wars. So this is something, also another very important characteristics when it comes to the China tech landscape, that we should always be mindful of before you decide to look at any China investments, not just Alibaba, but other companies in China. So the mitigation strategy, the way I see it, is that at the end of the day, how we can protect ourselves as investors is, yes, while this is the landscape in China, but I want to only pick really the highest quality businesses. How do we know whether it's the highest quality businesses? This is where you look at companies that have very strong economic moats, right? Or companies that have a very good cash cow business, like what you see for Alibaba. Their core business can generate cash very well on its own. So it gives them the balance sheet to go and do all of these investments, right? Or to navigate through any tougher economic conditions, or when they want to try and defend market share or capture more market share. Because it is this kind of companies that can survive. Imagine a small player, you cannot fight using such a manner, right? They will not be able to survive. So that's why you always have to look at such kind of companies, very strong moat. They have very good core business that are generating a lot of cash, all right? Now, so the next thing is, how can investors actually invest in Alibaba? Because now that we talk about the whole business, you understand the business better, you also look at some of the key focus areas, you look at the key investment risks as well to make it a balanced understanding. The next thing is, how can we invest in Alibaba? So the interesting part of Alibaba is that it actually has a dual primary listing. That means to say that it's listed on the New York Stock Exchange, and it's also listed on the Hong Kong Stock Exchange. So on the US side, all right, the ticker is BABA BABA. Right, on the Hong Kong side is the ticker is a number 9988. Okay. Now, but actually, aside from this Hong Kong exchange as well as the New York Stock Exchange, do you guys actually know that we can also buy Alibaba on SGX in SGD? If you know, can you help me type a yes? If you don't know about this, can you help me just type a no? Okay, so quick question. How many of you here, you actually know that Alibaba, you can also buy or sell on SGX in SGD? Yes or no? Okay, just let me know, yes or no. Okay, let me see. Do you guys know? Yes, no, 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 yes, no. Okay, some yes, some no. Okay, so what happens very interestingly is that on our Singapore Stock Exchange, we actually do have this thing called SDR. Okay, which in full term, what we call it is Singapore Depository Receipts, and the ticker is called HBBD. But when you invest in this HBBD, actually you are really still investing in the business of Alibaba. It's still the same thing. Okay. And what's interesting is that you can buy not in Hong Kong dollars, not in USD. You can actually do it in SGD. And also the dividends you receive will be in SGD because, by the way, Alibaba does pay dividends. So when you receive the dividends, it will also be in SGD. And another very interesting thing that some people don't know is that your SDR holdings will be custodized within your within the investor's central depository as well. So it's like a seamless integration with their existing Singapore-based portfolio. Now, I know one of the common concerns that many investors have when it comes to SDR is they are afraid about the trading liquidity. So if you ask me, if I compare the SDR for Alibaba versus the Hong Kong market liquidity, yes, it's true that the liquidity will be comparatively thinner. But however, one good thing to know is that the Alibaba SDR is actually already one of the more actively traded SDRs that we have on SGX. So on SGX, we don't only have Alibaba, we actually have the other. So as you can see here from this chart, we do have the other names as well for the China Hong Kong company names, and for Alibaba is actually the top traded, one of the top traded SDR on SGX, right? Another important feature about Alibaba SDR, aside from that it's being able to transact in SGD, is that it is actually investor friendly for small capital investors because of the SDR ratio. So what is this SDR ratio? For Alibaba, their SDR ratio is 5:1. That means to say, if I buy 5 SDR units, it represents me buying 1 Alibaba share in Hong Kong. Okay, and the bought lot is 100 shares. That means each transaction I must minimally buy 1 lot, which is 100 shares or 100 SDR units. So let me give you an example using some numbers to understand this. So let's say today, let's assume that today now the current price of Alibaba is $130. Okay, then for the case for the Singapore SDR, I'll take the 130 divided by 5 because 5 SDR represent 1 Alibaba Hong Kong. So it means to say it's about 26 Hong Kong dollars, convert to Sing dollar, $4.26 for 1 Alibaba SDR. But each time, remember, the bought lot is 100. So each time I must buy 100 shares. So 100 times 4.26 means to say every transaction minimally, I need to have $400 to be able to buy Alibaba shares on SGX. Now, on the other hand, if today I look at the Hong Kong side of things, if you look at Hong Kong side, the bought lot is also 100 shares, and then 130 Hong Kong dollars for 1 share. It means to say it's 13,000 HKD. You convert to Sing dollar, it's more than $2,000. Minimally, one transaction I pass in, I need to have at least $2,000 to be able to buy Alibaba. So this is the difference. So that's why I say it's investor friendly for small capital investors because of the SDR ratio. So now, even if I have very small amount of money, or even if I'm a student, or even if I'm new to investing, I don't want to put so much money yet, I can still start to buy. And it is also better for you to be able to do averaging down. You will still have the bullets or the capital to actually average down your cost when you need to do so in the markets, right? But of course, for some of you here, if you have deep pockets, you think this is not my concern, right? This is not something that I worry about for the capital size issue, then yes, you can always look at investing from the Hong Kong market side. Okay, so one of the question is, you mentioned that Alibaba market penetration is high. Is it a monopoly? Okay, so I believe this one you saw for yourself, the market share chart, one of the slides just now we talked about it. And what are the chances that Alibaba runs into antitrust issues in China? Yeah, so actually, those of you who do not know, back during the COVID period, that was the time where they were running into these kind of antitrust issues in China, and then because they were having some unfair practices for the platforms, right? So therefore, the government wants to step in to stop this kind of monopolistic kind of measures. So if they have things like this, then yes, the government might step in. But after what has happened back in the 2021, the whole saga, right now, we are looking at something that's really changed, where they have actually scraped off what they used to do, right? And the government has also mentioned that they are done with the entire regulation for the Chinese tech side. Okay, so that's for the question to Emily. So it is still the highest in terms of market share. Alibaba platform for China e-commerce, it is still the largest player by market share at this point. Okay, so let me go to the next one. Not sure if I missed this, but since Alibaba's strategy is to grow from relatively unsaturated sectors such as cloud as opposed to e-commerce, do we see this strategy yielding returns in the form of, let's say, higher year-on-year percentage revenue growth? Versus that, yes, definitely. So, okay, maybe I can go back to my slides first. Give me a moment. Okay, so if you look back at the slide, I think I didn't manage to screenshot the number for this part. Okay, but I didn't manage to screenshot the number for this part, but actually in the last few quarters, the revenue growth for the cloud business has been much higher as compared to what we saw for the e-commerce side. Yeah, and this 33% is for the last 3 quarters. That means to say 9 months of financial year 2025. So it's not just 1 quarter or 2 quarters, but actually we have been seeing the higher revenue growth for their cloud business versus their e-commerce side. So that's why we are saying that this could be one of the key potential growth areas for Alibaba business, right? Can I check if we are able to request for today's recording for reference? If not, can you request for both speaker side? Okay. For my side, for my slides, unfortunately, I can't share with you, but we might post this up on YouTube lah. So if you post it on YouTube, you can replay the video. So you just go to the Joyful Investors YouTube channel. And you will be able to find it. Sure. Next question. Alibaba share price has fallen quite a lot after the release of the earnings report on 19 March. So what catalysts can you see if you choose to continue holding on to this stock? Okay, so basically what I've just shared, right, those are long-term catalysts. To look at the AI side as well as the cloud, those are long-term catalysts, and these are also areas that the management has also explicitly talked about in their recent earnings call. If you actually went through some of the materials, or if you saw what they say. So, but again, like I shared at the slides, right? I can't predict the price, so I don't know when it is going to go up more. Or how much more. So, but this, what I've talked about today essentially is about the business model, which is for the long term. Okay, but of course in the short term, a lot of things happen. Like, no, we are having the war right now, and markets are really volatile, not just only in Singapore, in US, Hong Kong, Alibaba, all of these as well. Their share price also came down in the last few weeks. So these are some of the things that can happen in the short term that can continue to affect the share price, whether on the upside or on the downside. Yeah, but then if you are looking at in terms of holding on for this for the long term, the catalyst, the business model, is it still sound? That is what we have actually gone through essentially in the slides today. All right. Next one. I miss Hazel's first focus area part of the slides. I can view it from the recording, upload to YouTube. Yeah, so if we upload to YouTube, you will see the slides also lah. You will see the slides with my face, okay, on the YouTube replay video, just like how you see on Zoom lah, okay? So you can just catch the replay video again on YouTube. Most likely we'll actually upload it on YouTube, so that those who didn't manage to join us today, they can also be able to find out more. But of course, you guys who actually join us here today in person, you get more lah. You get to ask me this kind of questions. I get to answer it live immediately, right? Yeah. Okay, if you still have any questions, you can actually continue to type that in the chat box. In the Q&A box, I'll still be here. And then in the meantime, let me just share with you the upcoming things that we have. Firstly, if you want to follow us on our various social media platforms, you can scan this QR code, then just click on the relevant social media platform that you want to follow us on. We are on all the different platforms. If you want the latest updates, you can actually follow us on Telegram. But of course, we do have videos on YouTube. shorter videos like on Instagram, TikTok as well, right? Or Facebook for shorter posts. Or you can just go to the platform, just type in the Joyful Investors. Aside from that, if you want to learn further, not just over webinar, you want to learn in person, we also have been doing some of these topics, right? We have been doing many sessions of it. The next one will be in April. 24 April, and it will be on the topic of Singapore REITs. So if you are keen to also look at Singapore REITs for dividend investing or to tap on the recent price decline, you can find out more in this session. It will be an in-person session and it will be in the evening, right after the work hours, so that you guys can all come on time and join. Then after that, the next session will be in May, not on REITs, but we'll be sharing more on how this entire roadmap for investing can be like to build wealth for both growth investing and dividend investing. So it will be especially helpful for those who are struggling. Sometimes you feel that you make money, sometimes you don't make money, or those who are completely new to investing, or you are just starting out, or you haven't even started but you don't know what are the next steps to take, then you can join us for the May session, also in the evening in person, right? So you can just scan this QR code to go and register for the one that you want to join us for, right? And one final slide. So what I've shared with you guys today essentially is on the case study on Alibaba. But in fact, we have been doing this for very long already, not just only on Alibaba, but we also cover US companies. We cover Singapore REITs or some of the Singapore dividend paying companies as well. So our community who are under Investing Note portfolio, they actually receive all of these deep dive reports. Every month they receive 2 stock. That means 2 company and also reports, and also 1 market analysis report where we'll cover typically on what's happening in the world, especially in the US markets. And sometimes we talk about the Singapore markets, the China markets as well. So if you want to find out more about how this might help you over the long term for your investing journey, you can also scan this QR code, okay? Right, so thank you all for joining us tonight, and we hope to see you guys again in future sessions of this webinars that we will still continue to hold. All right, thank you.